Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. In this video, we will understand the simplest tool of technical analysis, which is known as Dow Theory. This is the most effective tool to trade, to invest into the stock market, be it cryptos, be it currencies, be it commodities. And I think this is one of the 100 years old study which is still being followed by most of the people worldwide. So let's understand what is this theory all about. Okay, so Dow theory was introduced by Mr. Charles Dow, and he used to write into the Wall Street Journal in 1900 where he has created or invented these studies. Okay, so he invented these studies based on the most important principle that the past, current, and the future prices are discounted into the stock action or index, whatever you are looking at, or the currencies, and it reflects into the price action of the stocks or index. So the most important is that price discounts everything as per the Dow theory. Okay, so let's look at how to identify the trend as per the Dow theory. So there are basically three trends. One is the bullish trend, one is the bearish trend, and when the trend change happens. So let's understand the bullish trend. If you look at the screen over here, so I have marked 1, 2, 3, 4, 5, which means that the prices are going higher and higher. Say 1 was say 100, 2 is say somewhere around 105, say 3 is somewhere around 102, the 4 goes above 110, which is the, if you look at 100 highs to 105, 105 to 110, 110 to 115, and the lows from say around 103 to 106, 106 to 109, which means that the prices are forming higher high, higher low structure. It's a sign of bullish trend. Vice versa, when the prices are forming lower high, lower low, it is a sign of bearish trend. The most important is the third one, when the trend changes from bullish to bearish or bearish to bullish. So if you look at the structure over here, 1, 2, 3, 4, 5, 6, it is a sign of bullish momentum where the prices are forming higher high, higher low structure. And if you look at the 7 over here, the previous low of 5, which was the low, the higher low, is been taken out. Say probably say higher low would be around, and the 7 low could be around 96. The price is at 8 goes higher, slight higher, but it didn't cross the level of 6, and then it falls back below the low of 7, gives a confirmation of the trend change and happen. Vice versa, it could be the bearish to bullish where the lower high, lower low structure is ended and price forms the higher high, higher low structure. So it is a sign of trend change. This is very, very important as per the Dow theory. You need to understand it. And I'll show some example also on how to trade this using the charts. Okay. So second is the most important, how to identify the trends. Okay. So he has defined three important trends. The first is the primary trend, which is for long term, and he has termed it as the tide. In the modern now, in era in 2000s millennium, we have been indicating it as a secular trend or the long term trend. Okay, so basically it is identified using the monthly scale chart or the quarterly charts, which I am looking for a long term perspective, more than 5 years, 10 years, 15 years, 20 years, 30 years chart, and identifying the long term trend over here. So if you look at the right hand side of the chart, this is a Sensex chart since 1980, and if you look at the lines over here, the prices are forming higher and higher low structure. So there was a period between 1992 to 1998 where it consolidated, then again post 2000 started running at the faster pace. But if you look at the structure, it is forming higher and higher low structure. So I haven't seen any trend change on monthly or quarterly scale of Sensex as of now. So still the secular trend or the tide is very, very bullish. Second is the secondary trend or intermediate trend, which ranges between 6 months to say 5 years, and this can be identified using the weekly scale. And I am using the log scale over here, the charts. Now, if you look at the weekly scale over here into the chart, the secondary, 2008 we saw the breakdown, the black line. If you look at the black line over here, so weekly scale, on monthly scale we were still bullish, but on weekly scale, which is the secondary trend, has seen a breakdown in 2008, the black line, which means that the higher high low structure, the previous lows were taken out. Similarly, in 2020, if you see the black lines, the higher low structure was broken down with the black line, and the previous low being breached, and we saw a sharp correction. So that's the weekly scale you can look at. And the third and most important is the day trend, or say probably swing trading, which people do for say 1 to 2 weeks, 3 weeks, a month. And second is the intraday trend, which is being identified using the daily chart or the intraday chart, which ranges from 1 minute, 2 minutes, 5 minutes to hourly, 2 hours, 4 hours, 75 minutes, 90 minutes. There are n number of people who tried various time frame of the charts. Now, if you look at the right hand side over here, I have been using more n number of swings, which are more compared to the weekly and monthly scale. Here, an intraday trader would be very much interested in 2%, 3% move. So, if you look at these swings, could be around 3%, 4%, 5% moves, and intraday trader or a swing trader could be interested in those kind of trends. And this can be identified again using higher low structure. Okay, and he has also identified additionally how the market cycle performs. Again, this is not a short term cycle which he has indicated, but a long term cycle. So let's look at the long term cycle as per his study. If you look at, there is a 3 phases: accumulation phases, where the stock is accumulated by a large chunk of smart investors, FIIs, institutions. Retailers are slightly late to identify such kind of accumulation phase going on. And there is one theory called Wyckoff theory, which I have been discussing in a number of charts in my previous videos, will help retailers to understand when these smart investors are buying. Okay. And second is the rally post the accumulation phase, the breakout happen, and the post the rally there is a euphoria. In euphoria, every Tom, Dick and Harry stock will see a huge upside momentum, and stocks runs like anything. So there is no tomorrow kind of moves which each and every stocks would have in a day, in a week, or a time frame. And this is where you should be very cautious into the euphoria phase. And the last phase of market cycle is the distribution, when the smart investors, FIIs, DIIs, institutions, big players exit from their stocks. And such distributions are an end to the market cycle, and then market corrects or the stocks correct by a large margin. So you need to keep a watch on this. Okay, so let's look at how to trade this Dow theory. So I have just identified one example over here on the Sensex. Now, if you look at the one which is the low, which I have taken as 1, then prices went higher, formed the lower high. If you look at the previous high was not taken out. Okay, the high above previous to prior to the 1. Third, if you look at the prices breached below the low of 1, forming the lower low. Fourth, if you look at the second high is not taken out, which means that the lower high is in place. 5, if you look at the lower low has been formed. 6, lower high has been formed. Now 7, if you look at the lower low, the lowest of all. 8, if you look at the 8, the highs of 6 was taken out over there, but still I don't have a confirmation that the trend changes happened. Okay. Now, if you look at the 9, the prices are from higher low. The lows of 7 are not yet breached, but highs of 9 is also not taken out. At 10, if you look at the 10, the highs of 9 is not yet taken out. But prices again form higher low at 11, and then the highs of 10 is taken out, which I have indicated as a 12 as a breakout level. Now, if you look at the trend line, which has plotted the black over here, it indicates that the previous highs are taken out. Now the breakout has happened into the stocks, and if you look at the 13, the high structure continues into the higher side. So this is the way you can look at each and every stock, index, currencies, cryptos, commodities, to identify the short-term trend, long-term trend, primary trend, the secular trend which is going on into the Dow and Nifty and Sensex, which is still bullish. So it kind of trading you want to do, and if you are an investor, I would suggest use monthly and quarterly scale as a trend decider. Use weekly as an entry point, and use the top down approach into the from monthly to weekly. And if you're a short term trader, you can look a weekly trend, daily trend, and enter into the hourly chart or 2 hour chart or 4 hour charts. So that's the way you can trade using Dow theory and to the stocks, commodities, currencies, cryptos, and every asset class where the technical data is available. Signing off, Brijesh Bhatia.